If you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. You just buy the Bitcoin as much as you can buy because we know where all the money's going to eventually go. The capital is all going to flow in the Bitcoin network, and the more everything else grows, the more Bitcoin is going to grow. So you could just go right there and then wait for the world to enrich you.
Michael Saylor doesn't just compare Bitcoin to gold, he goes much further. In his view, Bitcoin isn't just digital gold, digital cash, and a bearer monetary asset all in one. Just as gold underpinned the global financial system in the 19th century, Bitcoin is poised to become the foundation of a new financial era. But unlike gold, Bitcoin is infinitely more portable, divisible, programmable, and incorruptible. According to Saylor, every major form of value from sovereign currencies and municipal bonds to corporate debt and even household mortgages will eventually settle in Bitcoin. It's not just an asset, it's the base layer of tomorrow's financial system. If you found that insight valuable, don't just smash the like button, subscribe, and hit the bell icon so you never miss our latest updates on crypto, Bitcoin, and the future of finance. Drop your thoughts in the comments, we want to know. Do you see Bitcoin becoming the new global settlement layer? Your engagement helps us reach more people and keeps this channel growing. Thanks for watching, and now, let's dive in.
Well, Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset. If you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. And so I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on, or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. Just like, that falls toward the center of gravity, which is the middle of the earth, and none of you have been there. That doesn't mean that it doesn't control everybody, right? Everything will be oriented in a frame of reference. You know, you're going to have massively valuable companies that a million robots creating a million robots with like 22 employees that are worth trillions of dollars. Don't need the land, don't need the labor, have the money. Where's the capital going to flow? It's going to flow into the Bitcoin, right? I mean, if you create extreme wealth, right, there's going to be two types of people. There's going to be the people that bought the Bitcoin and they're going to be privately wealthy, and they're going to live off of that, or something that is denominated in Bitcoin, right? And then there's going to be everybody that's getting wealth redistributed to them by political systems. There won't be a lack of stuff. There'll be infinite stuff. It'll be redistributed in a political economic process, which will be interesting. But the consequences of AI is that it's going to create massive amount of capital, and the capital that you're going to want is digital capital because it's the best capital and it's the most useful capital. When the AI thinks 1,000,000 times a second and trades with another AI 1,000,000 times a second, they're going to trade with Bitcoin. They're going to trade with digital capital 1,000,000 and 1,000,000,000 times faster. They're definitely not swapping buildings. They're definitely not swapping gold bonds, bars, or coins. They're definitely not going to trust anybody else's sovereign credit. They're not going to trust private credit, public credit, sovereign debt. They're not going to use cash. They're going to use pure digital capital in cyberspace. So it's all bullish for Bitcoin, and it's going to drive the price of Bitcoin up. And if you haven't figured out how to make money by putting AI into your business, that's hard. Then I give you the easy answer. You just buy the Bitcoin as much as you can buy, because we know where all the money is going to eventually go. The capital is all going to flow in the Bitcoin network, and the more everything else grows, the more Bitcoin is going to grow. So you could just go right there and then wait for the world to enrich you.
Michael Saylor reveals a staggering fact. MicroStrategy now holds about 2.5% of all Bitcoin in existence, a move that has created over $23 billion in value for the company. But the bigger story? This strategy has helped fuel an estimated $2.2 trillion in wealth across the broader Bitcoin ecosystem. The key takeaway: everyone benefits, not just whales. Even smaller holders, retail investors, and independent entities gain from Bitcoin's appreciation. And here's the part Wall Street doesn't want to hear. They can never truly own Bitcoin, even if institutions manage to claim 5% or 10% of the supply. The vast majority, 90% plus, will remain in the hands of individuals, sovereign nations, and decentralized entities worldwide. Let's watch more clips from the interview.
BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. And that meant that while we pursued that, by the way, technically, if you go to Saylor Tracker, you will find that all of the work that we've done to get to 2.5% resulted in like a $23 billion gain for us, $23 billion. But it resulted in a $2.2 trillion gain for everybody else. Okay, so it's not like I got the money, right? What is the ratio of $2 trillion? Someone else has $2 trillion, and we made 20 billion, and we have this small little piece. So it's like when Wall Street is 5% of Bitcoin, that means 95% of the 2.5 trillion is not Wall Street. When Wall Street is 10% of Bitcoin, Bitcoin will be at $1 million a coin, and that means there'll be nearly $20 trillion of not Wall Street money that will be sitting everywhere else in the rest of the world, in the rest of whatever. Right? The energy, it's impossible for anybody to take over Bitcoin in a hostile way, because the more aggressively you buy Bitcoin, the more you empower everybody else that disagrees with you. You see? Like, the harder I go, the more powerful everybody who took a different point of view becomes. And so I refer to it as a perfect machine composed of imperfect components. And yeah, the world's full of people that hold Bitcoin or have Bitcoin in a country you don't like, in a method you don't like, doing things you don't like, but they're empowering you. And the harder they go, the more they empower you. And so what happens is, what would happen if Berkshire Hathaway decided they're going to buy $100 billion of Bitcoin tomorrow to all the rest of us? Right? It's not hurting you. It's helping you. What happens if they do the opposite, right? And so I think Bitcoin is a classic anti-fragile network, and it's getting more stable. It's getting more conservative. It's getting more indestructible, more anti-fragile, the more that it is embraced by any entity, whether you agree with their values or not. They're all just strengthening the network against whoever is the next attacker. Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. And we would, in essence, be destroying, we're crippling our own securities and crippling our own performance to diversify.
Michael Saylor's vision for the future isn't just bold, it's rooted in mathematics, technology, and economic first principles. To him, Bitcoin is not just another investment asset. It's much more: the monetary protocol of the future, the foundation of digital capital, the apex commodity for the AI era, and the settlement layer for a global civilization, one no longer constrained by borders, politics, or blind trust. This is more than a financial revolution, it's the blueprint for a trustless, borderless, programmable economy that empowers individuals on a global scale. If this resonates with you, don't just watch, take action. Like this video, subscribe to the channel, turn on post notifications so you never miss a moment in this ongoing transformation. Watch more videos to explore how Bitcoin, AI, and decentralized tech are reshaping the future of money and value. Join the conversation, drop your thoughts in the comments below. Every voice matters. Let's build the future together. See you on next video.